and welcome to another episode of Babe, the Bitcoin and Blockchain Evolution. I am your host, Sarah Herring, with my co-host, Matt Davio, and we are joined today by Jonny Fry, who is the CEO of Team Blockchain Limited. He's also a close personal friend of our homeboy and one of our earlier interviews, Thomas Powers. Welcome to the show, Jonathan.
Good afternoon. This is London calling.
Yeah, hello, London calling. So first off,
is Mick Jones with you right now?
No.
British joke.
Yeah, I know. Never mind. At least we've done you one favour. We've taken a very glamorous lady from America and we're going to turn her into a princess. So it just shows Hollywood dreams do come true.
Ever since I was a girl, I was hoping to marry that ginger, and now he's off the market. Just kidding. I wanted to marry him. Who would have thought he would have been the handsome one of the two? Am I right? What happened?
Well,
anyways.
Perhaps if you'd been called Auntie Shabley, then maybe he would have gone for you rather than Auntie Chardonnay.
We gotta mix it up.
That's a good point. You really should have a Auntie Chianti too.
Yeah, well,
Spicy.
I'm actually a Pinot Noir girl, so but that just doesn't have the same ring to it. Let's get serious.
Pinot what?
Pinot Noir.
Oh, Pinot Noir. Oh, sorry. I do apologise.
That's not a cute, like, anti-Pinot Noir just doesn't sound the same.
Auntie P. No, maybe that's Matt's title.
Let's just get right deep into this, though. I know we ended up having some technical issues. We started a little bit late, so we don't have as much time, and I definitely want to pick your brain as much as possible, Jonny. So first of all, let's talk a little bit about, you have a very extensive business history, and I think one of the most important things that we always want to get out right in the beginning is how and why you've made this transition from this more traditional sort of business landscape into, you know, what obviously I see as the future, which is this blockchain and crypto world.
Sure. Well, I basically ran, I set up literally from my bedroom a fund management business. I thought I was frightfully clever by buying a television with something called teletext. So you could actually see with a 15-minute delay the price of stocks and shares on the London Stock Exchange, rather than waiting for the following day and buying a copy of the FT and then talking to clients about what had happened in the market the previous day. And that was back in 1985. And the business then evolved and grew to an extent that we actually floated the business here in London. And we were selling what you'd know as mutual funds to professional intermediaries, broker dealers, and floated that business on the stock market. So it was a fairly traditional, pretty sort of standard business, and we got it up to around about just under $2 billion equivalent, whereby we were managing money in bonds, equities, and funds, as well as structured investments for really private clients and small institutions. I then left that business. Yeah.
No. So you did that right out of your university studies. Pretty.
Yes.
And so
I'd always been interested in managing money or looking at markets. Back in 1981, when I was still at university, we saw the advent of traded options, and you saw the launch of the FTSE 100 index. And my godfather, he was a board director at Lloyds Bank, and he used to be what you'd now call a day trader. Because back in the day, you'd be able to buy and sell shares, but you didn't actually have to pay for them for up to a fortnight. So it was known over here as trading within the account. So if you thought BP was going to go up in the next 2 weeks, you would fill your boots with BP, and then you'd sell them just before the end of the account, and you would then have to settle the profit or the loss that you'd actually accumulated.
So you could actually do that in the London markets and never have to put up capital until the end of the transaction. That's interesting.
Yeah. So what he taught me was actually, buying individual shares was pretty risky, but actually doing asset allocation, so actually putting money into the FTSE 100 or the S&P 500 or, the Nikkei 225, you immediately then started getting the odds in your favor, because 2/3 of fund managers do not beat the index. And if you look on a mutual funds, you'll say the only management fee for many mutual funds in the States and here in Europe, they say 1.5%. But when you look at the total expense of those funds, it's more like sort of 3.5%, because there's custodians and administration and audit and marketing fees. Whereas if you just put your money into an index fund, Vanguard obviously being one of the biggest in the world, the total expense ratio is normally under 50 basis points, so 0.5%. So I set up a fund management business by doing asset allocation predominantly, as opposed to trying to sort of pick the next stocks, because, you know, I just thought that was a bit of a mug's game, to be quite honest with you. So we left that business.
It's a difficult business, absolutely, picking individual names. So I'd love to. So you exited a very successful business after a long, successful run, but obviously you have a bent towards technology, being that you were one of the first people to kind of have a 15-minute delay. So I would imagine you were early on Twitter, as I was as a trader. Like we're junkies, right? We're information junkies. So talk us the story of how you got to Team Blockchain.
Well, after I left this asset management business, I basically was asked to come in as a sort of angel investor, an interim CEO of a publishing business, a technology printing business, a packaging business, a property business. So I really didn't want to go back into financial services, because I just felt that there were so many intermediaries and so many. There was still quite a strong old boy network, and it was just something where the only reason most people work here in the city is for one thing only, and that's just how much can I earn. So it tends to attract a different type of person. It doesn't serve any higher social good. It's just all about making money. So I wanted to get back in sort of companies and businesses where you were trying to create some sort of value, and in doing that, started to realize the opportunities around sort of particularly around blockchain about 3 or 4 years ago, looking at how could you use this technology in a very practical way. And so I'd known Thomas Power for a number of years, because our children went to similar schools, and we just started talking about it and kicking ideas around, and we launched Team Blockchain, I suppose coming up for about 18 months, 2 years ago, to really go and help people understand the opportunities and challenges around the technology. And very quickly, through his sort of social network of people of mine, we had people that were, you know, had good experience in pharmaceuticals, in media, in travel, in logistics, insurance, banking. And so therefore we were able to go and talk to people about their business and how the technology could be used in their business. And that was all fine and hunky-dory. We had people literally all over the world sort of that we were talking to. And if I'm honest, our agenda got hijacked about this time last year. And people started saying, look, you know, I want to do this thing called an ICO. So I went and Googled ICO, and up came the Information Commission Officer. Because here in Europe, we've got something called GDPR, General Data Protection Regulations. And Europe, we now have, for every country, I think there's 28 Information Commission Officers. And if you don't believe it, just Google it now and you'll see. It's not an initial coin offering. So that made me realize there was a lot of misunderstanding, and there was a lot of hot air being spoken about this subject. So we started talking to companies about how we could try and steer them through that maze, put them in contact with the right lawyers, the right accountants, the right marketing people, to actually do an ICO that was correctly positioned and also correctly structured. Because most ICOs out there, they actually don't, they pretend they're a utility coin, and it's just bulldash. You know, 99% of the coins out there are securities. So just comply with existing regulations and don't take the risk. You don't need to incur that risk. Just pay a little bit more for costs and do it correctly. And that's been our stance almost from day one.
It's interesting because I think that a lot of people that I know have been saying, of course, like all the money's in ICOs and like you got to get in this ICO game. This is where it's all at. But then at the same time, a lot of people who've been in the financial industry for a long time are simultaneously saying like these are all Ponzi schemes. This is all pyramid schemes. So in terms of from your perspective, having been in business and industry and finance for a long time, but still being in the spot of trying to help companies get to the space of having an ICO, tell me what your perspective is on the landscape of ICOs.
Well, if you have a global offering, then I think an ICO is a fantastic vehicle to raise capital and to raise the profile of your business. And ICOs, however, are not just about raising capital. We sort of look at ICOs really in probably 3 or 4 different categories. There's your startup company, which has been all the rage in 2017, want to raise some money, solve a technical problem, and raise some cash. And let's be honest, probably 90% of those businesses will bust in the next 3 to 5 years. The second category of ICOs are ICOs whereby they're effectively becoming digital loyalty schemes. So in the US, you have $300 billion a year of loyalty programs. But what people don't talk about is that the very, very successful marketing people in American Express are creating an utter nightmare for the American Express finance department, because they're creating an intangible liability. So the more successful the loyalty program is, the worse or the bigger the impact is on your balance sheet. Whereas you set up initial coin offerings, a completely separate company, it's possible to actually do airdrops or give away coins, or actually encourage people to buy the coins so they can get discounts on your products and services, and create and build a community. Because what we're seeing in the market is a real a division. There's old plodders like myself, and then there's young feisty things like you, Sarah. You know, the millennials are completely different. They no longer trust the traditional institutions, banks, governments. You know, it's why we've got Brexit and you've got Trump, because they want
exactly
their voice heard.
And really, you know, I think this is where democracies fail, is that we're catering to the minority. Actually, the minority is the loudest, and this stands for anything, whether it's, you know, the government, a socialist. You know,
Matt, you're absolutely right. And so I did a workshop for Microsoft Ventures over here just for Christmas. Hugely successful program. 97% of their companies over the last 9 years are still trading and profitable. And I said to the audience, how many of you actually directly own equities, stocks and shares? And about 40-50% of the audience put their hands up. The rest of them obviously had equity exposure through mutual funds and, you know, 401ks and pension funds. And then I said, well, how many of you own cryptos? And they sort of said, is that with a C or with a K? I said, okay, so none of them. About 2 weeks later, I was asked to go and speak to one of the business management schools in London, and spoke to these sort of doing MBAs and masters over here, typically from Europe, around about sort of $40,000-$50,000 they'd be paying to do their course. So coming from fairly affluent, highly educated background, what percentage of them owned cryptos? 40-50%? What percentage owned equity? They had no idea what an equity was. And these are tomorrow's leaders. And so therefore, I think what we're seeing with ICOs is the ability to an extent to democratize, but it's giving the ability for people to get involved in that secondary market. So what I mean by that, you know, I'm helping a company at the moment that actually is going to invest 100% into US commercial real estate. The fund manager manages his own money plus a family office. So it's a very institutional type offering. They're only going to raise 150,000. They went to their clients, their private banks, their high net worths, and said, we're going to give you shares or units or, in this fund, special purpose vehicle, going to run it for 10 years. And a number of them said, no, can you give us cryptos? Can you give us sort of tokens? They said, why? Well, because our end clients want exposure to the crypto market. They want something that can trade 24 hours a day, 7 days a week. So they're now designing a token that is 100% invested in US commercial real estate. And when the dividends come in, the rental income, it'll be converted and paid out in the top 2 out of the top 5 largest cryptocurrencies. So at the moment, it's Bitcoin and Ethereum. But in 5 years, 6 years' time, who knows what it'll be. So those private banks can go back to their clients and say, you've got tokens in the property fund, and now you're going to get every quarter, you're going to get a dividend in a cryptocurrency. And it's a really different innovation.
Yeah, especially in a product like real estate that is not liquid. That's a fantastic decentralized liquidity transfer that has never existed in that space.
And Matt, when they go and buy a property, and let's say the property, there's bound to be over the next life of the fund, there's bound to be one property does really well, and they get a lump sum paid out. So then they'll use the blockchain technology, say, right, okay, this is your money, not me, the investment manager. What do you want? Would you like a special dividend and have your money out? Or do you want us to reinvest that 10% of the money back in and buy more property? And it's really quick, it's really efficient, and it's involving the people whose money it is. Because I think the city and Wall Street have lost respect. You know, I'm your fund manager, and I'll do what I want with your money. And it's just not good enough anymore, quite frankly.
Well, listen, I mean, you guys are ahead of us on the curve in the UK as far as what's going to happen. And really the big shoe hasn't dropped as far as pensions, right? We have these democratic, and I'll call them democratic because they're teachers' pensions, they're firemen pension, they're police officer pensions that are underfunded and can never be paid. And the people that are expecting these, entitlements, they're not going to get them, and they have not been told yet that they won't get them.
Correct.
When that shoe falls, let's not even talk about alt currencies. We're talking here about the transfer of trust and decentralization. Decentralization is the most positive thing that can happen to any government. Ultimately, that's what separated. That's why the U.S. is the U.S., because we didn't want the monarchy, over us when we left.
Yeah,
so,
you love her really, though. You want her back.
We've become what we left. I mean,
of course. It's standard. I feel like when we always go back that direction, it's the way of human beings is to ultimately want this. But I think something you touch on that is super interesting, which is actually something I wanted you to speak to a little bit more, is this. So you said, okay, we started off sort of with this idea of blockchain, and then we sort of got hijacked into helping people with their own ICOs. But these two things are sort of intimately, I think, connected. And I would
very much so,
especially in someone who's involved in a lot of these bigger businesses, and talking a little bit about sort of the connection between blockchains and ICOs and the tokenization and all this, how you sort of need them both for it to work.
Well, ultimately, for any token sale, you've got to have some sort of contract to convert fiat or other cryptocurrencies into the token of your choice. So at the moment, the favored route is to do an ERC20, which is basically using Ethereum. My guess is, I believe Ethereum has been a victim of its own success, and therefore it's beginning to creak. They had no idea they were going to end up with 1,600 different basically businesses running off the back of its platform. So now you're seeing, spin-offs from Ethereum. Probably the biggest one is Cardano. You're seeing Charles Hodgkinson setting up AdaCoin, and it's basically going to be a direct competitor to Ethereum. It's going to be faster. It's going to be slicker. Then you're seeing, the likes of Telegram come along. This is just a phenomenal. I've never seen any form of information on my phone or on a laptop that can process information like Telegram. You've got communities and groups, from nothing to 100,000 in a matter of a few months. And therefore, they're creating a platform to enable real-time data analysis, market research, a gauge, a sentiment. You talk to any large company, talk to the CEO or the marketing director or the board. What do people think about us? What do they think about our new products? What do they think about what we're doing and how we're doing it? Then they go and employ people like Nielsen to do market research and see what papers you're buying and TVs you watch. But the millennials don't watch TV. They don't, look at the amazing news of Facebook last week. They've actually signed up or been signed up by the Major League Baseball in the States. Yeah, they decided the TV wasn't the right medium. They've gone digital media. Look at the FMCG companies like Unilever, like Procter & Gamble. 40-50% of their marketing is on digital marketing. So therefore, to have a digital currency, a digital coin, and to touch your point about governments, governments, this is what I find really ironic. Bitcoin was set up to allow anonymity, meaning I could actually deal with someone in a trusted environment and they never knew who I was. So it was a dream come true for drug barons and money launderers and nefarious activities. But governments now realize, because it leaves a digital footprint wherever you go, it's a fantastic way to combat the black economy, because they can track and see where the money's going. So we're having conversations with central governments now about how do we set up a digital coin similar to an ICO. Do you want to raise money?
Do you believe the Venezuelan president when he says that they actually sold 5 billion of their oil-backed crypto last week? Do you believe that?
I'm surprised it was as little as that. Because all you now end up is you've now got a proxy to crude oil prices that can be traded 24 hours a day, 7 days a week without all the brokerage costs. So why wouldn't you want to hold that, providing you're comfortable that actually they have got the assets and they have been reserved? But in the same way, the Turks are talking about doing the same thing. The Turkish government's talking about a digital coin, which will be backed by Turkish Airlines and a whole chain of its hotels. In the UK, we've seen the Hull coin, a local authority setting up a coin to trade. 9 years ago, we saw the Brixton coin, a suburb of London, where they actually identified their own coin. So none of this is new. It's a bit like Tesla, the star of your, a company that seems to lose billions and everyone still falls in love with him. Did you know the first Grand Prix in 1894, there were 3 electric cars? 3.
Yeah.
But they only went about 5 or 6 miles because the batteries went flat. Same problem that Tesla's got now. We can't make enough batteries.
Although did you see this morning, Volkswagen committed 25 billion in batteries, a purchase that they're going to convert their entire fleet. So
they're going to have to. They're going to have to. So what we're seeing ICOs being used to tokenize assets, like the property fund I just mentioned to you. You'll continue to see ICOs to raise money for what I call venture capital. And we've seen what's happened to the venture capital market in the blockchain space. ICOs killed them by a ratio of 5-1 last year. We're now seeing institutions come to this space. 3 or 4 very, very large, crusty old UK financial institutions we've been speaking to in the last couple of weeks, who are desperate to get into Telegram. And suddenly, they've got like 100 or 200 million of unslated demand for ICOs because they tried to get into Telegram and couldn't, and had no idea that there was that much interest in this space.
Yeah.
So beginning to groundswell.
Yeah, the JP Morgans of the world, Jamie Dimon was like, oh, it's Bumpkins. And then he realized all the fees that he's missing out in his investment banking business.
Precisely.
From opportunities like Telegram, that he's like, whoa, wait, we got to get on this.
Of course he has. But the thing is that you don't need to pay those fees. You can do it quicker, faster, more efficiently, and have more direct engagement. So go back to the Telegram example and look at some of the groups on there. If you go telegram.io and look at the biggest groups in the world for Telegram, first of all, quite rightly, it says, do you want to look in Russian, Portuguese, Spanish, French, not just English, the arrogance that unfortunately my country's had for, a couple of 100 centuries. And you can then look at the communities and what they're saying and how they're doing. They're handling 70 billion messages a day. And I've just put something out on LinkedIn this morning. I think that you could see Telegram do to Facebook what Google did to Yahoo. Quite easily.
Yeah, I totally agree.
You're going to see a company with 4 billion in cash. Basically,
totally.
Direct with the clients, interface with the clients.
I think something else I wanted to ask you about in this article that I want to say you wrote this on LinkedIn, which is a fantastic article. I'll put a link to it when I post this podcast because I think it has tons of interesting information. But one of the things you touched on, which I've actually been talking a lot to my husband and other people about, is that there is a correlation between the volatility index, the VIX, and the price of Bitcoin. And actually that there seems to be a very correlation between almost all of the crypto space and what's happening in the stock market, which I hope has some good implications, but I wanted to get your thoughts on that.
Okay, so the average performance of the average hedge fund over the last 5 years has been somewhere around about 5-6%, because the alpha, i.e. the amount that you can outperform the market, has been crushed by low interest rates and low inflation. So what's happened is that if you like, an outlet for that, people looking for something a little bit different, and you've seen cryptocurrencies come along where they've been moving in a way that's not correlated to the actual stock market. So I'll send it to you, Sarah. I've got a little chart from Bloomberg, and it shows the correlation of Bitcoin, because that's the longest we've got the track record for, compared to the S&P 500, to global bonds, global equities. And then what we're talking to people over here is saying, okay, so now let's look at a portfolio, 50% global bonds, 50% global equities. How has it performed? And then there's another chart which shows you 49.5% global bonds, 49.5% global bonds, and 1% in Bitcoin. And every time it goes up, you top slice the Bitcoin, and when it goes down, you top it up. And what it shows you over the last 3 years is a performance on a risk-adjusted basis. Because a very, very clever American called William Sharpe came up with a concept called the Sharpe ratio. So in English, what he looked at was the up and the down, the volatility of different asset classes, took away treasury bonds, i.e. risk-free, and then divided it by the volatility, the zig and the zag, the standard deviation. And that gives you the ability to compare different asset classes. And if you look at the 50% global bond, global equity, and then look at the other portfolio of 49.5% and 1% in Bitcoin, you've got a 30% increase in risk-adjusted performance. And what I've just said, most of your listeners, with the hugest respect, is gone, so what?
No,
but for institutions, they're saying, wow.
Yeah. Here's what it means. Trading desks have been stifled for a decade because of the interventionistas, as Talib calls them. So the central banks have pumped money in there, making all assets the same. Doesn't matter.
Crush them. Absolutely.
Yeah. Every asset is the same. So there's no correlations. There's no anti-correlations. They're all trading with, guess what? The dollar. And as the dollar goes
and
down,
as the dollar collapses in value,
asset goes up. Yeah.
Absolutely. So if you look go back to your friend Mr. Diamond at JP Morgan, according to them, since 1971, the dollar has collapsed in value by 81%. Close to home here in Europe.
Closer to 98, actually.
Well, in Europe, no firm of accountant has ever signed off the accounts of the euro. So when people turn to me and say, yeah, well, what are these cryptocurrencies backed by? Yeah, it's not like a real currency. I said, thank goodness. Thank goodness it's not a real currency. We'd be really in problems.
Of course, it's all correlated to the time that we went off the gold-backed dollar, right? In the 70s. It's like, we're always trying to explain to people, we're already in a digital currency world. That's already happening for sure. And secondly, anything is ever worth is what people value it at, because
it's all backed by hot air anyways. Exactly.
Absolutely. Well, unless it's backed by discoverable oil, in Venezuela. What a great idea. Providing legally it is backed by it, but I don't wish to cast aspersions on Venezuela. But let's say the Swiss did, I don't know, something backed on all the gold that they'd heisted over the last 2 world wars. We know they've definitely got it. Imagine you had a currency backed by gold.
Amen. And that's actually what we were trying to do in the beginning, right? But then we just let the people take care. Well, Johnny, I know that you have tons to do, and we've reached your mark. But I would love to talk to you more. I would love to pick your brain.
Well, let's do another one.
Yeah.
We'll do another one.
And before we let you go, please tell all of our listeners and viewers where they can find you if they want to get more.
Disneyland. Probably dating Pluto or something.
You really want to go to Disney World. Disneyland's just not the same.
You've been in the sun too long.
Yeah. I've never been to either, guys, and it's actually
you should. You should. So. They even pump smells of popcorn and candy floss in the air to make you buy more. All that corn syrup. I love America. I love America. My sister lives there. She'd be very proud I'm on American radio today.
With AuntyChardonnay, amen. Well, Johnny, we'll put all of your stuff in the description for sure. Please send me that chart. I'd love to add it into the video. To splice that into the video.
I will.
Talking.
I will.
Anything else that's interesting, I'll edit it into the video before we release it.
Johnny, are you on Twitter?
Yeah, I'm on Twitter. Jonny Fry, JONNY FRY 175.
It's like a super special agent name. Jonny Fry, JOONY. I love it. Well, thank you so much. I really appreciate your time. I know you have a lot going on, but yeah, we will reach out shortly, and I will send you all of the links and everything as soon as we get this bad boy up.
Brilliant. Okay, and if you actually look on my Twitter, sorry, not my Twitter, I'm on LinkedIn. I've done about 20 articles, which covers a number of these points. And, I started off last year doing, I wish I'd been given a Bitcoin, not a chocolate coin for Christmas.
Yeah.
Because I was trying to sort of explain to my mum, bless her, who's 83. She said, Johnny, what on earth are you doing these days? And I said, well, I'll tell you, let me write it down. So it sort of evolved from there. So it doesn't need to be complicated. This is your money. And this is always the mantra I had running an asset management business. It's your money. It's not mine. I've just been privileged to be able to look after it for you. And I think we just lose that sight sometimes.
By the way, I meant to weave this in at some point just because it's a fun fact, but did you know that the original westbound rider for the Pony Express was also named Jonny Fry here in the United States?
Wow. Take that in. And I'm with you, Johnny. I've been loving reading.
Yeah, I hope that's not fake news straight from Mr. Putin.
That is real history. I'm a history nerd, so.
Facts.
All right, guys. Lovely talking to you, and I'm sure we'll do it again.
Take care. Bye.
Thank you very much.
Bye.